Hi, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the flows week ended August 19, 2015, both mutual funds and ETFs reflected fairly light trading activity. Not much to speak of in the way of net inflows. Let's start off looking at how mutual funds adapted in this week's macro group's perspective. Starting off at the top, equity funds had about $500 million in net outflows. Taxable bond funds had another week of outflows, this time about $300 million. Municipal debt funds had close to zero in terms of net flows activity, and money market funds, one of the few bright spots this week, about $5.4 billion in net inflows. Well, this week started off well for equity funds, with about 3 days up and 2 days down on the Dow. Bear in mind that this week's flows data only includes Wednesday of this week and not the Thursday and Friday, where equity markets have suffered terribly. We expect some interesting flows next week that will reflect that data. But for this week, investors only had a little bit to digest. Certainly news of China's devaluation of the yuan kept people in a back and forth mood, trying to figure out what that meant. Did it reflect further weakening in emerging markets? Did it mean that the Fed would lay off the possible rate hikes? That all contributed to a general sense of malaise or euphoria back and forth in the market this week. In the end, not much changed hands as far as flows. Again, $300 million this week was, $500 million this week was not that much. Now, domestic equity funds, they saw about $2.1 billion in net outflows. This continues a trend that we've seen all week long. Non-domestic, of course, taking in the lion's share of positive flows where we could find them, about $1.5 billion this week. But once we scratched the surface a little bit, we did see some concerns about emerging markets. As a classification, they led equity outflows, about $404 million in outflows. Europe, on the other hand, led the way, or was one of the leading areas, with about $416 million in net inflows. Overall, large cap tended to be the worst place to see outflows this week. About $1.4 billion drained from them. That hasn't really changed much, and certainly with this week's data on domestic equity funds having significant outflows again, it all points to large cap as being the weak spot in the data. Well, let's turn our attention now to equity ETFs. They enjoyed about $271 million in net inflows, a fairly light week for them. The direction of flows was all over the map. We saw leverage, utility, and Japan classifications leading in terms of inflows, while small cap, large cap financials all led the charge at the bottom with outflows. In terms of individual ETFs, WisdomTree Japan Hedged, which is the symbol DXJ, they were at the top of the leaderboard for individual ETF inflows this week, about $361 million going into that fund. The Russell 2000 ETF IWM was among the worst for outflows this week, about $854 million in outflows. Spider S&P 500 didn't do much better. It too had outflows, about $500 million in outflows this week. Next group to take a look at is taxable mutual funds. Again, $300 million or so in inflows. Wasn't a terrible week for them. What's interesting, though, is that despite the treasury market being kind of flat to slightly down at certain points over the week, investors were taking a risk-off behavior or attitude when it came to individual classifications. High yield and loan participation among the week's worst for outflows. High yield saw about $152 million withdrawn. Loan funds, $669 million. So investors are increasingly concerned with loan funds these days. Outflows have been lower each of the past 3 weeks than they were the week before. So as we can see, like 4 weeks ago, over $2 billion was withdrawn. The following week, less than $1 billion, and then $700 million this week, about $300 million. So investors, I think, will turn to inflows the following week. And with everything going on in equity markets Thursday and Friday of what is now the next flows week, I expect to see a pretty good turnaround in taxable bond flows. Well, let's see how taxable ETFs did. They didn't do, well, actually, they were one of the brighter spots this week, about $884 million in net inflows. They had about $3 billion in outflows over the prior 3 weeks, so this week was definitely a change in direction, maybe some anticipation of what was to come at this time. Treasury funds led the way, about $607 million in net inflows. High yield, surprisingly, different from municipal debt. From taxable mutual funds. They took in $604 million this week. We saw emerging market hard currency being one of the softer plays, about $220 million in outflows. Inflation also in the form of TIPS funds also had outflows about $138 million. So two different stories here between mutual funds and ETFs, with the ETF investor absolutely willing to take on a little more risk and put more money to work in the bond fund arena. Next group to take a look at, municipal debt funds. With inflows of about $63 million, well, we're pretty close to zero. I'm willing to call it flat, which is not a bad place to be for muni debt this year. Performance has been improving, although this week about 11 basis points or so in a negative 11 basis points. Kind of pointed south this week, but really not too bad. Maybe time to take some profits off the table after a string of pretty good performance earlier. We saw high yield muni debt funds take in the lion's share of inflows, about $188 million, while short maturity, not a short position going against munis, but short maturity muni debt funds having outflows this week. They are the leader in outflows with about $145 million removed from them. I think this is a good sign for the municipal debt market. Investors are willing to take a few more chances on muni debt funds in the form of high yield muni. I think some of the headline risk out of Puerto Rico has subsided, and they're willing to probably get into that and probably take money out of short muni debt, which tended to be a very conservative play. Well, the final group to look at is money market funds. Again, $5.4 million in inflows this week. I think there's investors just parking money on the sidelines till they feel out the direction of this market. We saw retail funds taking the lion's share, about $4.2 billion. Institutions, on the other hand, were good for less than $1 billion this week. So somewhat different, as the institutions probably putting more money to work on the taxable ETF side than the retail investor who wants to wait it out and get a little clearer direction before they act. Well, that'll do it for this week's flows activity. Join us online at www.lipperusfundflows.com. Also, Icon subscribers can watch for us every Friday morning on the Global Market Forum, where we will talk about flows again every morning at 8:30 Mountain Time, 10:30 Eastern. So looking forward to talking to you later. Thanks.